At a time when a bull scare is going on, fears of slowdown are hitting global equity prices, risk aversion has started, global volatility has shot up. Everyone is looking for cues, so how should one find method to this madness? To do that, I have with me someone who needs no introduction whatsoever, Rakesh Jhunjhunwala. Mr. Jhunjhunwala, what a delight to have you back on ET Now. Thank you for your time. What does the recent market movement remind you of?
In 2008, the world was largely unprepared for what was coming, what came through, and also I think 2008 was the ultimate end of a 30-year-old or 20-year-old bull market in equities, commodities. I would say in equities and a lot of other asset classes. So I think first of all we don't have this 20-year legacy with us. Second thing, people were totally unprepared. I think there is some amount of consciousness of the problems prior to them, coming to the fore. Also, I think in India, the equity value, the earnings are far higher than what they are in 2008. Also, I think that in India there is no commitment of the retail investors, right? And also, I think there is very much lesser leverage in India and worldwide as compared to 2008. So, I think then the anxiousness with which people are comparing this to 2008 gives me an intuitive feeling that this is not 2008.
Would you trust rating agencies this time? Because 2008 rating agencies got it wrong.
Well, I think it will be if you don't trust them at this time, it will be a story of the boy who cried wolf. And I don't think you need a rating agency to tell you that unless America and Europe improve their fiscal conditions, right, that they will not get into serious trouble. So I don't need a rating agency. I think the rating agency has only been bold enough to say what is needed to be said.
The way US government is handling this crisis, do you think they are very smart in admitting their problems and finally they are admitting their problems?
See, it's not so much about the government as it is so much about the people. See, in a democracy, it's always a public opinion that prevails ultimately. And the fact is that Americans are feeling today that the dollar has lost value, the American prestige is at a low, militarily they are becoming weak. So they realize, and remember, America is a very patriotic nation. So I think Americans, I think longer term, shorter term there is pain, but longer term this is very good. That these problems which they try to bury under the pillow are coming to the fore, and I think any democracy remedial measures will be taken.
But do you expect global economic growth to slow down significantly?
Well, I always expected that the Western world is going to slow. So I can't say, I'm not any economist, that whether it will slow down significantly or not. But I don't see any way by which America can grow more than 1.5, Europe and America can grow more than 1.5. So growth is going to slow down, there's no question about it.
At a time when global growth slows down, equity as an asset class, it always tends to underperform.
See, but Nikunj, there's a very big dilemma there, that in America there's a very big worry about the macro. But the micro is really, the American markets are really cheap, the companies are doing extraordinarily well. So I don't know how to, of course, sentiment towards equity will surely, be affected on fears of a slowdown. How much this slowdown will hit earnings, I think is still a question which only time will answer.
So is it too early to make an assumption that Indian economy will not grow at 7%?
Well, I don't know about the percentages, but I surely feel that India has the resilience to grow well. And because India is a largely consumption story, right, it's not totally isolated, but it is partly isolated from the world. Second thing, I think a lot of questions are being raised today about India's long-term growth prospects and our fiscal and monetary conditions. I think we as Indians have to take action so that the growth capacity of the economy, which is a function of the savings, which we have, I think, which is no problem, which will increase every year, and the investments are made. And I think now that there is realization, see, the beginning of the end of a problem is the realization and admittance of the problem. I think there is realization and admittance of this, and India also being a democracy. And I'm very happy that when the executive did not do very well, it is the Supreme Court, the CAG, the RBI which is pointing out. And public opinion is forming around the fact that government must act. So, there could be some short-term pain in India also. I can't predict the percentages. But I have no doubt in the next 3-4 years, India will have the capacity to go double-digit every year and for a long period of time.
But Rakesh, Indian markets always do very well when others do badly. So are we approaching that phase now?
Very difficult to say. I don't think that's necessarily right. But I see that if we have a good monsoon and oil prices correct, and we can control, then therefore which will help us in controlling inflation. And government comes up with some good policy measures, the land acquisition bill, the GST, the DTC. I think these are three most important things, and also facilitating of faster decision making. We must protect the environment, but we must not let the ability to eat and the ability to wear clothes and the ability to have a house. So we got to find a middle ground, and I think we will. So if we take all steps which can promote investment and put, projects on the ground, I see no reason why the markets will not do well.
At current levels, are markets looking oversold?
I have no idea. It's very difficult. I don't understand charts, and of course, after such a big fall, there could be a rise.
But are they looking attractive enough?
Well, I think in terms of stocks, not in terms of markets. So I don't know. I would, to make major commitments, I would wait for the market to, first rise, then correct, right, and then see where it goes in the correction. And if that correction makes a higher bottom when there is disillusionment and there is lack of commitment, then I think that would be a very good bottom to buy.
So I don't want to get this one wrong, and correct me if my interpretation is wrong. Your clear assessment is that in the near term, markets may not fall more, but they will also not recover in any hurry.
That's what my opinion is. I feel 60-70% chances that they will not recover in a hurry. And as it is, I'm fully committed, so it doesn't make a difference to me. Right? But I feel that, markets always give time both to the buyer and the seller. So now markets, after such a fall, I think markets will give time to the buyer.
Last time when I interacted with you on this forum.
And here I also say this, that if markets go in a V rise, that rise may not be very sustainable. It's only when markets, come to a level, train within a range, past 1 or 2, 3 months, right, then only will you make a recovery which can be substantial and sustainable.
100 points there doesn't matter, but do you see 5,000 acting as a base for the Nifty?
I wish I knew, who knows.
But what is your analysis?
I can't say because there are markets, see what is value and what is valuation. Stocks go to 25 times earnings, they even go to 8 times earnings. So markets don't find bottoms by earnings. Markets find morning bottoms by, money flows, by sentiment, right? So I can't predict where the bottom is.
Rakesh, there's one end of the market which is looking very expensive, which is your consumption stroke FMCG space, and there's one end of the market which is looking extremely weak and extremely cheap, and they're trading at a multi-year low, which is infra. Do you see both these parts that will continue to trade at such a deep variation?
I did some analysis and I found that valuations are a product of 3 factors: growth, return on equity, and cash flows. Now, the FMCG has got reasonable growth. They have got very good ROEs and very high valuation, very high payouts. Now, on the other side, in infrastructure, there is a constant need for money. The governments are not paying in time. The debtor days are going up. A lot of companies are overcommitted. They need, a lot of companies need capital, which is 3 times their, if you see their expansion plans, 2 to 3 times the market cap. So there's anticipation of further dilution. Projects are delayed. Margins are not good. So I think then promoters have done acts which are not healthy. So I think that is the reason why that variation is there. That variation will narrow not so much by the FMCG valuations going down, I think, but the infrastructure valuations going up. But I think that's going to be a very, very long process.
Is infra looking attractive now?
I'm already committed in infra, so I'm not going to buy anything else. But surely, for a long-term investor, if you're a good company, it's attractive.
But you've sold your infra stocks, some of them at least.
Not at
Punj, a little bit
Yeah, I
tinkering
sold
here or
Punj
there.
completely.
And you've increased your exposure to Praj. All public information.
No, Praj is. I just made a small purchase of Praj. There is nothing. I just bought 10% of what I already had.